tax expert, one of the most common things I get asked is how can I write off my car? Well, being a business owner, that's one of the best perks, being able to buy a brand new car, being able to write off all the things like the gas, the insurance, the maintenance. As tempting as it is to go out and buy a new car and start expensing, there's a few things you got to be aware of in terms of CRA, because vehicle expenses are the most commonly audited thing by the CRA. So by watching this video, I'm going to go over everything you need to know about buying a car, expensing everything, and how to document everything in case CRA comes knocking down, maybe 1 year, 5 years, 10 years. You follow the plan, you'll have everything sorted out and there's nothing to worry about. So make sure you watch the entire video to understand how vehicle expensing works. So first, the most important thing is only driving related to business purposes can be expensed. Anything that's driving for personal cannot be expensed. I'll go into this later on how we're going to break this down. But first, what is business purpose driving? So business purpose driving is when you're driving for anything business related. It could be to go meet clients. It could be to run errands. It could be to go to the post office, to pick up supplies. So anything that's related to your business that you were driving for. On the flip side, we have personal usage of the vehicle. So that's when you do things personally, like going to the gym, going to the grocery store, picking up your kids from soccer practice, anything personally. That driving cannot be expensed. An important note here is driving to and from your office is actually considered personal usage. So that's right, driving from your home to your office and from your office to your home is not eligible expense. So you can't write off that driving kilometers. So the reason CRA has this is because employees also incur the same cost. They also have to drive to their office and they also have to drive home. So why should business owners get special treatment? For that reason, CRA does not allow that particular travel to be expensed. All right, now let's talk about the actual expenses. So one is the cost of the car. So the cost or the lease that you pay to, have ownership of the vehicle. And then the second are its operating and maintenance costs. So your gas, your insurance, your maintenance and repairs, all that stuff, right? So there's two different types of expenses for your car. Another note here, anything related to a DUI is not an expense. The cost to tow your car, the cost to get legal advice, that cannot be expensed. Of course, I know my viewers would not do anything such as drinking and driving, but I thought it would be fair to mention we do get asked that question sometimes. So let's get into the options of owning the car through your business, and this will be based upon what business structure you have for your business. So either you're going to be a sole proprietor or you are going to be operating as an incorporated company. If you don't know what that means or you want to dig more deep into it, I've actually made a video about that. So make sure to check that out. If you're operating as a sole proprietor, that means, you are the business and the business is you. So all you have to do is simply buy that vehicle, go through the expenses. At the end of the year, you would prorate your business usage of the vehicle and your personal usage, and it's a lot simpler. As a corporation, it gets a little bit trickier. You have two options here. So one obviously is the corporation can buy the vehicle and then you take a personal usage portion of it. So your personal driving from that car, you would have to include in your taxable income. Now, the reason that happens is because the corporation is a separate entity. It pays its own taxes. The corporation is the one that's leasing the vehicle or owns the vehicle. And you as the employee or shareholder are getting a benefit of using the company's vehicle. So therefore, in CRA's eyes, that should be taxable. So to calculate this taxable benefit, you would have to add up all your personal usage kilometers driven in the year with the use of the company car. And for 2023, that taxable income addition is going to be based on 33 cents times however many kilometers you drove for personal usage. Now that rate changes every year. For 2023, it's 33 cents. The second part on how the personal usage of the vehicle is going to be added to taxable income is through something called a standby charge. And it's a complicated mathematical formula. Of course, this is CRA. So I've actually included their link in the description below where CRA has an online calculator where you can punch in all the numbers for yourself and get that standby charge to see how much of that standby charge is going to be added to your taxable income. The second option you have is if you own the vehicle personally under your own name, but you still use it for business related traveling, business related kilometers, you can pay yourself an allowance from the corporation for use of your vehicle. The allowance is based on the number of kilometers you drove for business purposes in the year. And for 2023, that's 68 cents per kilometer on the first 5,000 kilometers. And then it's 62 cents per kilometer on anything above 5,000 kilometers. Important note, if you're going to take an allowance from the company, you're not allowed to be reimbursed for any of the gas, any of the insurance, or any other expense at all. You're just getting that flat rate and nothing else. So now let's assume that the corporation is going to buy the car or lease the car. These would be your options. So for 2023, the maximum lease that you can do is $950 before sales tax. Now, that doesn't mean you can't lease a car for more. You can, but your maximum amount of a tax write-off is going to be capped at $950 a month. So let's say you leased a Range Rover for $1,500 a month. You can still do that, but the tax write-off you're going to get is going to be capped at $950 per month before sales tax. Or the company can choose to purchase a car outright. And then in this case, you get a maximum purchase price of $36,000 before sales tax that you can write off. Again, you can buy a vehicle for more, but the maximum you're going to be able to write off against your net income for tax purposes is going to be $36,000 plus sales tax. You also got to realize when you purchase the car, you're not able to write off the $36,000 right away in year one. I don't want to get too technical, but you have to write off the $36,000 over a set period of time. And this is by CRA's rules. Specifically, it's called capital cost allowance. The reason being, since you buy a car in year one, if you expense the whole thing, it's not really fair because you're going to be using this car for maybe 2, 5, 6, maybe 10, 20 years. So you shouldn't be able to expense the whole thing in the first year. It should be spread out over its useful life. A couple more things to mention about the $36,000 purchase price. If you are buying a work van or a work truck and you are using it for more than 50% of the time for business purposes, there's actually no cap. So you can go above the 36,000 and you'll get the full write-off. The other exception is for EVs. So the government's giving an incentive for people to get into EVs. So you get up to a maximum of $59,000 in a write-off, and you also get to claim the entire thing in year one. So this could be huge. So if you're a business owner and you're in the market for an EV sometime soon, now's a great time to pull that trigger. So vehicle expenses are an absolute CRA favorite. The reason being, people make mistakes or they get too crazy and they don't fully understand the rules. So CRA loves to audit vehicle expenses, but to be prepared, all you have to do is keep proper documentation. So all you need is the receipts for all your expenses. So you need your gas receipts, your insurance receipts, your receipts for your maintenance and repairs. And you don't need to keep these in paper copy. You can scan these, PDF these, take pictures, whatever. Digital copies are totally fine. Next is you need to know the total kilometers driven in the year. So easy hack, take a picture of your odometer reading at the beginning of your fiscal year and a odometer picture at the ending of your fiscal year. So you'll know exactly how much you drove in total for the entire year. Next, you need to know how many kilometers you drove for business purpose. So you're going to need the date. You're going to need the destination, you're going to need the business purpose, and you're going to need to know the total kilometers driven from point A to point B and back. That can seem very overwhelming. That's a lot to keep track of, but there's such great apps out there now for receipt tracking, for tracking your miles, that this whole process, once you've got it all figured out, it's very simple. Receipt tracking, you could do something like Expensify, and then for tracking your mileage, a good one is Mile IQ. Awesome. So now you're ready to buy a new car, lease a new car, expense insurance, gas, all that good stuff. And most importantly, now you will be ready to have proper documentation in case of a CRA audit at a future date. The next video, I'm going to talk about how to write off a portion of your home as an office and home expense. So make sure to hit subscribe, and thanks for watching the video.